Hey, good morning, everybody. Today is Friday, February 6th, 2015. My name is Cliff Backus. I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. Stocks moved higher yesterday on disappointing trading volume. Bulls would have preferred to see heavier volume on an up day. However, both the NASDAQ and the S&P 500 are back in positive territory for the year. Taking a quick look at the NASDAQ, we see that yesterday the NASDAQ was up 48.4 points, just a shade over 1%. Trading volume, as mentioned earlier, was down for the day. NASDAQ closed at the top of its trading range. That's a bullish sign. Yesterday, our 1 to 6 month timing model switched back to a margin signal. The reason for that is that we have an upward sloping 21-day exponential moving average, which we show in pink. We have an upward sloping 10-day simple moving average, which we show in green, and our market closed more than 1% above the 21-day exponential moving average. This envelope, shown with this black dotted line, is 1% above and below the 21-day exponential moving average to make it easier to see when we're trading above that level. What a margin signal on our 1 to 6 month timing model means is that conservative traders should be moving toward fully invested in their portfolios, getting rid of weak positions and replacing them with stronger positions. Aggressive traders can use margin to leverage up their portfolios. Let's take a quick look at the MACD histogram on the NASDAQ. You can see that the histogram right now is above the zero line and also is trending higher. Above the zero line is a bullish signal, trending higher is a bullish signal. And so our immediate term outlook on the NASDAQ composite is bullish. Let's take a look at the S&P 500. S&P yesterday was up 20.01 points, or 1.03%, exactly matching the NASDAQ. Trading volume was lower and was actually below average yesterday. We want to see trading volume a little bit heavier on up days. I've drawn in a minor resistance line on the S&P 500. You can see how we set this interim high on the S&P. We came back, we tested the high once, and now we're testing that high again. It'll be interesting to see if we can break above this level today. Like the NASDAQ, our 1 to 6 month timing model on the S&P 500 has also gone to a margin signal. S&P 500 right now is bracketed by minor support in the 1992 area, minor resistance in the 2064 area. We have more significant resistance up here in the 2094 area. Looking at our MACD histogram, we see that we are trading above the zero line. We're in an uptrend, both of which are bullish, so our immediate trend on the S&P 500 is bullish. Let's take a look at a stock that we bought yesterday. Paycom Software provides cloud-based human capital management software that manages employment life cycle for employers and employees. The stock broke out of a double bottom base on January 28th, right here. The breakout immediately failed and the stock pulled back. Notice the volume as the stock climbed the right side of the base. This is heavy institutional accumulation. The stock sold off on lighter volume over on this side and is beginning to move back up again. We drew in a trend line right here from the prior high, and the stock broke above that trend line yesterday on heavier trading volume. We'll set our immediate stop on Paycom at the low of this current bar, which is 2709. So our stop becomes 2709 right here. A little bit about a double bottom. A double bottom formation forms when a stock runs up at least 30%, sells off, attempts to rally, but doesn't close higher than the prior high, and then undercuts this low. When that happens, the midpoint of this W formation becomes our buy point. So when the stock broke above that midpoint on January 28th, it became a buy. That breakout failed. We're taking another run at it, and we'll see where we go from here. If you want to talk about Paycom, about the markets, or any of our trading strategies, please feel free to give us a call. Drop me an email, or if you'd prefer, make an appointment. Come on by the office, see what we're up to. If you're out of the area, we can also set up a Skype session. My contact information is on the home page. If you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. Finally, please take a quick look at our disclaimer video posted below this one. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable weekend. Keep your stops in place, and I'll see you again on Monday.